Well, hello everyone. My name is Cody Hall. I'm the host of The Faces, Entrepreneurs Are People, and the founder and CEO of Telehelping, a virtual staffing company, and the sponsor for our podcast. This morning, I have an interesting guest here with me, Bozidar Jovanovic, right?
Almost.
Oh,
Jovanovic.
oh, I'm just gonna call him Dark Vader. But sir, I appreciate you being here with us this morning.
Thanks, Cody. It's a pleasure to be there with you. So I can give you a little roundup.
Please tell me.
Absolutely. I came to US in '92 to graduate school and studied physics and got a PhD. And then right after that, I decided I'm going to do something else, and I went into finance. Not too unusual. A lot of people did that from hard sciences, became what's called quants, doing the calculation on in different banks. And I progressed to different aspects of financial services, finally ending up with owning my own company.
Yeah.
That's where we are. It's very
Where
simple.
where did you come from in '92?
I came from Serbia.
Serbia. Oh, how about that? I think every '90s action movie had some physics guy coming from, the greater USSR in some way, and studying physics. I've seen that. I've seen that action film.
Well, the thing is, the way it worked in socialist countries, hard sciences were still praised, and you had to do hard sciences the real way, while the social sciences were all compromised, right, with the socialist ideas. So degrees in social sciences were useless, while hard sciences people could, it's a tangible knowledge, and so you could if you were entrepreneurial enough, if you were brave enough, you could transfer it somewhere else if you didn't like your condition, and that's exactly what I did.
Very nice. That's an interesting thing as well. A very small part of our client portfolio is the data science area.
Mm,
We hire all of our folks out of Mexico, but Mexico doesn't really have an emphasis on the sciences.
mhm.
There's not a real big use for them in terms of the Mexico way of thinking, in terms of its economy. But I say it's interesting because we'll have folks who have multiple PhDs out of Mexico who are working full time for like our European partner in this specific example, for like $2,000 a month. This man has double PhDs, but Mexico just doesn't have a focus on it, and so he worked in a call center up until this point.
That is true. But I would say I remember in my graduate school days there were some very interesting collaborations with people from Mexico City University, right? So there is a
Mhm.
production. I mean, it makes perfect sense. You can harvest smart people everywhere if they have a proper background, and then in an increasingly connected economy, we can put everybody together, right?
I mean, that's the premise of telehelping, is that we
Mm.
hire the top 3% of Mexico, right? And so I agree. I agree. So you got into the entrepreneurial path, which is different than most scientists. It's not very common that a science person ends up as an entrepreneur. So
But
did you have that
it's
drive
a
of
little
the?
different than that, right? Yes, there
Okay,
is between the PhD and the entrepreneur. There's 20 something years of actually working on the street. So it's not like I'm an academic, right? And was sitting there
of
in
course.
ivory tower and writing papers. I actually was on different desks. I was working my hands on. I was in different hedge funds, in long only funds. And about last 15 or so years, my research was mostly about portfolio allocation, which is how I ended up being a chief portfolio strategist of a private bank.
Yeah.
And after that, I said, well, look, I can do this really well on my own. And I do it well, and then I can actually do things the way I think they should be done. Hence, that's how Honey Badger was born.
I love it, and I love the use of the name honey badger. What a what an awesome animal. I mean, being that you have such a mind for the market and allocations and things like that, I'd be interested to think what your mindset is around the current market and how it's behaving. It's, two, 3 weeks ago, everyone thought it was to the moon, and reality is starting to kind of kick in a little bit as the federal government's taking a different stance on its approach to interest rates and quantitative easing and its own portfolio.
Well, you have to think very short-term effects and actually secular trends.
Mm.
So the Trump election is a pivotal point because the reorientation towards market economy and trying to make sure that we do well here, as opposed to pursuing some sort of esoteric goals that only the professors in the sociology departments think important, is a very important thing. We have allowed ourselves to create a bureaucratic state that's stifling things everywhere.
Mhm.
And so that creates stagnation in innovation, that creates stagnation in creating different companies, even though we are still the most competitive place in the world. Even though you may have seen Jeff Bezos was on one of the TV shows in a few days ago and says there is a reason why the innovative ideas comes from here and not from Europe, because there is money around and people are willing to back up all sorts of ideas, even the most wacky ones, knowing full well that maybe only 20% of the time this is going to result in something, and that you may lose everything in such investments rest of the time. But people are willing to take that risk. That doesn't exist in Europe. That doesn't exist in Asia. And for that reason, that's the engine. But that engine uh, can be stifled by overly bureaucratic state and focus on non-productive activities. And why is this important? It's important because our quality of life depends on innovation, productivity, and making the markets function properly. That's what it is. So the initial enthusiasm after Trump election was that, okay, we're going to cut down the bureaucratic state, we're going to cut down the regulation and unleash the power of the market. Of course, we still have a lingering inflation, so now everybody's thinking, what's going to happen with inflation? How are we going to deal with that? So there is wobbling. What we are going to see we're going to see a lot of volatility coming next few months. First, until the cabinet is confirmed, and then in the first few days, thinking about what pieces of the policy would actually be able to be enacted. So there's a certainty, and we'll see a lot of volatility there. But secularly, if we take a turn in that direction, that is a positive, and it's just going to make sure that US decouples from like Europe and other places around the world, which is good for us here.
Yeah, I think that's a really great overview, and I think that's what I expect the U.S. to kind of revert back to more, get away from the bureaucracy aspect of a lot of things, and go more into that market approach. The things that make America, being the risk takers, the bold innovators. People always. I've had conversations with people in the past where they're like, "Well, what happens if the United States isn't a superpower one day?" And I was like, "Well, it's a massive redefining of the entire the country's identity. How does it impact our markets? How does it impact our companies, the people, right? Being that bull forward is the America." And so I expected that after the Trump election, which is why I was very long on a lot of things on the indexes, because I expected that crazy 200 something point increase that we got, but also it's cooled off. The reality of the inflation, and then there's the tariffs.
All of that, tariffs may impact different parts of the economy differently, but some things need to be understood. One is, yes, tariffs can be a drag, but in many cases, tariffs are actually used as a negotiation tool. The other part is, so that's one of the ways to make other countries behave in certain ways that we want them to. and the other part is also decoupling from China. It is not a smart thing. You know, I'll back up for a second. Benjamin Franklin said famously, nobody got poor from trading. However, that means that trading has to have both ends there, right? And if you're trading with somebody who is willing to undermine you by making even the small adjustments, say you can't get the loan to buy American product or things of that sort, that's not fair. Plus, you also have to be aware of you know cultural and economic competition and adversity. And China, the People's Republic of China, right, the Communist China, is not a friend. It is an global adversary, and as such, you cannot allow the specific like critical components or critical materials to be manufactured there in a way that you're fully dependent on, which we saw during pandemic. Like 80% or something of medicines was medicine components is imported from that. That's not something we want to do. That's
Correct.
going to create another trend. So we have seen it happening in the last like maybe 8 years, which is reshoring, and it's going to, that I expect to accelerate.
Mhm.
Doesn't mean that all of the manufacturing and such is going to come back here, but we may start creating a more strongly integrated market with the Latin America and Central America, because you have hire people in Mexico. You can ship stuff by truck from Mexico by rail. It's not subject to being sunk by a submarine.
Correct.
So that's a trend, and that may have other beneficial trends. Is that it consequential economic development in these places will lessen incentive for people to start barging across the border continuously.
Yeah. You saw
So,
that with the strong arming that Trump took on immediately after being elected. As
mhm,
soon as he was president elect, he started putting the pressure on Canada
mhm,
and Mexico because while there may be a divesting from China
mhm,
strategically, sure, and we talk about reshoring, we also mean nearshoring, and that's what we are at telehelping a lot in BPO.
mhm,
And I specifically invested in Mexico's well-being as a whole. I
mhm.
like to see it prosper, but you saw Trump put pressure on the president, and she obliged
Of
when
course.
she put 30 to 40% tariffs on imports from China, so that he could avoid Mexico being used as a pass-through.
Exactly. So that's part of it. There would be some consequences. We'll see. First of all, how much of that gets implemented. And I mean, yes, us as end consumers, we are the ones who are paying the cost of tariffs. But the idea there is to stimulate particular behavior and to stimulate domestic production. Yes, that in a pure economic theory, that is less efficient than what we would want. However, we do not live in an ideal world. There is adversarial relationships across the globe, and we have to be aware of that.
Yeah. No, that's one thing that I have back and forth conversations with one of my dear friends about. He fails sometimes to see the larger picture. Very big finance oriented guy. He's a day trader as his career, and so, but he's a very global thinker, right? He's like, oh,
Mhm,
we should all just get along and we should all just do this. And I was having a long conversation with him about critical infrastructure manufacturing in China and how it's like, we have our power grids, our power plants, but whether it's hydro, coal, or gas, all these big pieces are manufactured and shipped here. And it's not like things with China, our relationship is getting any better. It's not getting any cozier over the next 4 years. And so we always have to keep a critical infrastructure and strategic military approach to our trade relationships
mhm.
because those could sever overnight.
That is exactly the point. That's exactly the point. So one of the ways, my business is a financial advisory business. So it's not, you can always think about, okay, we need to maximize the profit for the clients, make sure that they maximize the returns for the particular stage in life where they are. But you have to be aware of risks like that. So yes, China has been growing and all that, but you also do not own shares as a foreigner in China. You own something similar to akin to ADRs. So that can be canceled overnight. So, for example, in our approach, when we have access to emerging markets, it's emerging markets without China. We specifically work with vehicles that have emerging markets without China. And does that really hurt people? You could think of, oh, well, I'm taking a pie, so I'm not participating in it. It's kind of a risk management tool, because if you're investing in emerging markets, even if you're not in China, a lot of emerging markets ship things, take stuff from the ground and ship it to China. So they are indirectly affected. So if the economy works well, this kind of investing will help you benefit from development in China while not risking your investment there due to disparate global bifurcation.
Yeah, it's hard not to have a China element participate anywhere.
Mhm.
It is the global manufacturer when it comes to whether it's the end product or inputs. Well, when you're looking at people's portfolios right now and you're managing, well, one, I'd like to. Who are your clients? And so that's because I speak to folks all the time who work who CFAs for tech startups.
Mhm.
I've had two recently in the oil and gas industry
Mhm.
specifically. So who are your particular clients? And then I can kind of
Sure.
talk to you about the portfolio management strategies that you're taking to mitigate risk and hedge things.
So the idea here was, and this is the reason why it's called honey badger, is because honey badger is, as you know, this small predator from Africa and South Asia, and it's known to be fearless. Stands up to animals much bigger than it, like lions and hyenas. And that's how I see our positioning. We stand up to the large funds and large banks and not be afraid to be contrary to them. For example, we are adamantly opposed to ESG investing, which imposes restrictions and imposes things on investments that are not economically prosperous based on very flimsy theories. So the people that we are looking at would be largely considered freedom-loving patriots. So the idea of a big honey badger is freedom-loving patriots build business for freedom-loving patriots, which means we are investing in America's excellence. We're making sure that you're well taken care of, that your vision for your financial security is going to be there. But at the same time, we also want to make sure that the shares are voted in a way to oppose these initiatives that diminish your return, that
Yeah.
on the long run focus company on wrong things. For example, recently there was some action by activist investors to get the board of ExxonMobil to slow down the production of hydrocarbons like oil and such. I mean, you're talking about an energy company to what exactly is there? How can you even come up? So these are absurd initiatives based on really flimsy theories. So that's one of the ways, if you are a freedom-loving patriot, if you have the future of your children and the future of this country in mind, you need to be aware and oppose this kind of ideas. So
No, it reminds me of a statement from, I don't know if you've heard of the show Landman. It's very popular right now, and it's about oil and gas industry in Texas and the pumping of oil.
mhm,
And these gentlemen are all sitting around this table, having a lunch at this board, and they're talking. This one guy starts talking about their responsibility as oil drillers to have an environmental focus, right? and worry about their carbon output. And one of the guys spoke up. He's like, "Who are we kidding ourselves? We are in the pumping oil business,
Mhm.
right? Anything and everything we do that limits that is counterproductive to our overall goal, which is making money." He's like, "I only care that oil stays between $78 and $88 a barrel." He's like, "That's where my interest is." He's like, "Anything else is living in an idealist world." He's like, "We don't produce solar panels and windmills." He's like, "We produce oil."
Well, the thing is also a modern civilization requires a particular use of energy. And if you look historically, the use of energy is what defined particular milestones in civilization. So you can have a modern civilization on windmills and solar because it's intermittent and it doesn't work well. Even in Texas, where they actually have this huge grid, you can see problems
Yeah.
with it because it's intermittent. It's not the solution. People who push that stuff also are adamantly against nuclear, which is really the only real zero carbon power. If
Yeah.
we were smart, we would invest in that and try to go to other nuclear things like fusion, which is still far away. But the more important thing is this: we cannot live without it. We cannot live without this energy. Nothing else can replace it. And the other dilemma that people say, how are we now going to go and say to people in South America, in Africa, in these places that barely, the people burn cow dung for heating in places around the world. Now we're going to go there and tell them, oh no, you cannot do this, even though we've been doing it for 100 years. You cannot develop. You're going to stay basically at the edge of sustenance. This is actually even a moral argument. It's immoral to be saying these things to people. We
Yeah.
have to. The, the most important thing is get as many people out of poverty with energy development as we can, and get them to a free market economy so that we don't have tyrannical dictatorial governments, and we will get into a better state because our emissions are going down with efficiency, with improvements. But people who are at burning wood and burning cow dung, they don't care about any of this. They're wondering where their next meal is going to come.
You
that's
know, you make
that's the real thing.
you make a great point there. I was a part of a consulting group that was at Frito-Lay and Pepsi
Mhm.
Cola headquarters last year, and we were sitting around talking about their green initiatives, and I could not restrain myself because we were sitting there talking about this chief green officer at Pepsi was talking about how all the trucks are getting electric fleets and this, and I said, and I was like, pardon me, but let's talk about the fact that about 30 minutes from my house in Mexico, on my way into Guadalajara, I passed by a Pepsi distribution plant where you have 100 trucks that can't even idle without creating a black fog around it. And so as I said, so I hear you. I hear you sitting here saying that in the United States, where people care to see that thing, we're making a difference. But the rest of the world just wants to make sure their Pepsi costs 20 pesos, right? I want to make sure my Pepsi
Even
is
more than that, they
inexpensive,
want to they want to make sure that they have something to eat. It's
right?
far more mundane. And I'm not saying, oh yeah, just dump everything wherever. We need to care about the environment,
Correct.
but the ESG initiatives are not about any of that. They're about controlling the population. And when you mention these trucks, it's a funny thing. If we wanted these trucks, uh, you know how big those batteries would be? 8,000 pounds, and each truck would need two of them. Imagine how heavy that becomes. It's
Mhm.
just mind-boggling. I mean, it's a nice idea in a utopian world, but in the real world, that's not going to work.
Well, I
Just not
think it
going to
was
work.
a company in Oklahoma City was thinking that they would create an electric fleet of 30 vehicles. And when they
Mhm.
put in the plans to the city, the city called them laughing because they thought it was a joke because the power draw for that facility was greater than the entire city's
Yeah,
power draw.
yeah.
And I just don't think we're thinking too far ahead, because I had a similar conversation yesterday regarding the fires in LA,
Yeah.
to my trading partner, and he was sitting there saying, he's like, well, all we have to do is put all of our power lines underground. If we do that, it'll reduce so much, risk. And I said, that's great, I agree, but there's better ways to spend $30 billion on infrastructure.
Yeah.
Like just getting it up to this century would be, a huge step, so they can power all these electric cars that everyone wants to use.
Well, it's not just that. I mean, the fires. There is something called the fire mitigation. I was once. I went skiing in Ruidoso, New Mexico. It's called Ski Apache. It's actually on Mescalero Apache Reservation, and they
Okay.
operate the ski resort and operate a logging. So the reservation is a couple of mountains around there. And as you go to the ski resort, you see starting fires, like little fires. And I was asking people, what is that? I said, they're doing control burns, making sure that they have enough timber left so they can actually harvest it properly and avoid massive forest fires. In California, they don't do that anymore. Oh, don't touch the forest. Well, look, something, nature is not going to listen to your fantasies. You don't touch the forest, you get a forest fire, and then everything burns down. It's a natural cycle. So you can either manage it, or we're going to have a disaster like this. It's absolutely heartbreaking to see these things.
I mean,
But
I live in Napa, and so, and
oh,
I'm in an area where between April
mhm.
and August, if we get winds, they kill the power, and so the entire power for our grid will be turned off in this area, because it's a matchbox. All it takes is a one power line sparking one tree, and then you thought you were trying to save an endangered squirrel by not cutting down its tree. Well, you just burnt down its forest.
Yeah,
And so,
yeah, that's exactly what it is. I mean, it's very well known. People can manage these things, but this is precisely the kind of reasoning why we are opposing these things and trying to vote our shares to make sure that that insanity doesn't prevail in these companies. Because by focusing on things like this, on flimsy data, on flimsy theories, and wishful thinking, you're detracting from what you're supposed to do, which is creating shareholder value and creating even more danger and damages that are much worse than anything that would be done, that would be different. So um, we are hoping that by forcing these changes, we'll eventually get to the national dialogue to figure out a better ways of managing our natural resources. Which, given the new administration, this may just start happening.
yeah, I think that's, if I were to put wishful thinking into play, and that's what I would wish comes from this administration, is kind of a reversion back to some reality. If we can get out of this world where you talk about the professors doing the thinking and the driving. Professors have never been the driver of innovation ever, and if they have been, it's in countries where they want to control the social topic and direction. But we need to get back to kind of this reality of, okay, what we're trying to make decisions on, we need to see real impact on, and
Hmm.
we need to get out of this idea of theory from 30 years from now that we're trying to pin. Like, we got real problems today. And that's what just using the fire as an example, I was telling my friend yesterday during this discussion, I'm like, sure, in a perfect world, we could put all the power lines underground. I agree with you. I
Hmm.
said, however, if we're talking about how to prevent fires in the coming year, right?
Yeah.
Right. Just tomorrow, it's called saws, hacks, and helicopters that trim, power lines. Let's start thinking about that, and perhaps maybe next year we'll have an impact, and then we can talk long term. But there's a today issue.
It's also like the esoteric ideas. Like that's probably feasible to put power line in the ground. But it reminds me, I don't know if it's an urban legend, but it's the story is that during the Second World War, uh, British had an issue with German submarines, U-boats, and so apparently somebody went to Churchill and asked and was suggesting, well, I have a solution for this. Heat up the sea, and it's going to be too difficult for them to stay under. I mean, yeah, sure, but simply unfeasible. There are, for example, there are ways to say optimize portfolios using very sophisticated methodologies. And then you would go to a bank and say, okay, so to implement this, what's going to be the expense? Oh, it's over $1 million. And what is the benefit? Maybe 0.5% a year. Get out of here. This makes no sense. It just that 0.5% is just an epsilon on the variations of a portfolio over the years. So no, doesn't make sense.
Yeah.
This is the kind of cost benefit thinking that needs to happen.
And, and that's an excellent caveat there is when you do pick your financial advisor and you do talk about how you want your money managed, you talk about the type of people that you're attracting. I, for example, if I'm making investment, I'm not doing it for 0.5%. Like I want 10%. Like I want a return. Where some people they'll take that 0.5%, that 1%, or they'll try to they'll be happy with being on par with the S&P 500 every year. I'm not that person. I'm more aggressive. Where do you find that your clients usually lie in?
So that really depends on the level of wealth. If you are looking, if you're starting out and trying to get into building your future in retirement, some index plus a little bit extra is probably realistic. Because if you are with limited means, right, you cannot really go with these investments that, yes, you may get like 20, 30, 40% a year, but the risk of losing everything is quite substantial.
Right.
So you have to make sure that you have some of those are possible once you build a certain level of wealth. But at the beginning, you want to be diversified and with emphasis on particular areas of the market that you see having good prospects in the following year. So, for example, what we do is like there is always portfolio allocation that's consistent with the client's goals and time horizon. But then there are some adjustments there to take advantage of current things. For example, infrastructure investment that is probably consistent with onshoring and nearshoring and things of that nature. So, or when it's the good prospect for energy, you want to emphasize some of that stuff. So that's probably the best way to do it. I would say one of the most important things when investing, you get ahead by losing less. So you want to structure your investments in such a way that when, say, market's down, you're down less than the market. So there would be an impact on the other side. So if you're up, you're going to be up less than the market. But it's important to watch that ratio. If you are up when the market's up more than you're down when market's down, you're getting ahead slowly. So what happens there is that cone of volatility, that the variation of your investments is kind of getting smaller, and you can sleep better at night, and your returns are getting more certain. That's what it is about.
I not only have I done that misstep, but I've also, I have the experience now where the way I trade allows me to sleep at night. My trading partner, he's the type of person who will wake up in sweats to look at the futures to see what's going on. And it's like, how is that a way to live? I want to be able to hit the send button on my execution of my trade and not worry about if it works out as I planned, great. If it doesn't, not the end of my portfolio. And so, I do a long range, short range strategy. So I'm always playing future spreads, and then I do intraday trades that are completely independent from my long-term strategy, because sometimes my long-term strategy has me down in the short term because I'm waiting for a CPI catalyst or a presidential election, right? So, sometimes, people forget that, sometimes you have to give some ground to get ahead. And so that's how I play the waves.
It's important to do that. I would say, especially for people who are just starting, get a notebook. And a notebook, when you want to invest in something, write down, I want to invest today's date. This is what I want to invest in. Here are the reasons. 1, 2, 3, 4. This is what I'm seeing. Here is where I want to exit. And then revisit that and make sure that you're there. And if you come close to that exit point, check it out. Has the economics changed? Has the market changed? No. Okay, once you hit the exit point, exit. Yes, maybe there is some more upside there, but if you did your analysis well, that should work. And being staying disciplined and consistent will gain you long-term results.
Yeah, no, I think so. I started off trading by following a gentleman named John Carter, and I read his book and started focusing on his trading methodology. And he calls it not being a D for a T. And so the idea is like, if your goal is an option example, if your goal is 4 and you're at 4.5 and you think 4.5 may be as close as you're going to get to 4, you take 4.5. And so he's like, you don't wait for it to go to 9 and where you started. He's like, sometimes you just have to take what the market gives you, because it gives and it takes.
And by no means you will be right all the time. There are sometimes things look good, and then new data comes out, and the investment doesn't pan out. Make sure you cut your losses and go elsewhere. Do not wait for the market to, I'll just need to break even. That break even may happen in 20 years when it really doesn't matter to you anymore. Meanwhile, you could have done much better in something else.
No, I completely agree. Well, sir, as we're gearing up towards the end here, I'd like to give you a moment to give us your company pitch, the quick overview for those listening, and how someone might get in contact with you if they're interested in talking further.
So I would say very important, Honey Badger Advisors is a fee-only advisory business. We are a fiduciary, which means we don't depend on a bank or a fund or an insurance company. Which means also we don't get any kickbacks, any kind of fees from them. That creates independence, which means we work for you. We work for our clients. We have your best interest in mind, as opposed to sales quotas. This is the product we need to move. We have none of those, which means our approach is, let's make sure that you get to your goal, and let's see how we're going to get there. Plus, we want to make sure that we have values aligned, so that when we are investing, when we are voting the shares, when you vote your shares, you vote them in a way to make sure that American excellence comes out. So primary target are the freedom-loving patriots of this country. Because there is, if you go to a big bank and a big company, you will hear ESG here, ESG there, all these other things that don't matter that much to you, and actually are detrimental to yourself. The easiest ways to get in touch is through our website, www.hbria.com, Honey Badger Registered Investment Advisory. There's a contact form there. There's a way to set up an appointment. Send a message. We'll get back in touch right away, and we can discuss your situation. We are able to do business anywhere in the country.
Wonderful. Well, Bozidar, thank you so much for your time this morning. And if you're listening, please get in contact with Jim. What a wealth of knowledge and perspective. I thank you for your time today. If you enjoy and like our show, continue to like and follow and share. If you want to be on it, you can message us at info@telehelping.com. Telehelping sponsors and allows me to take an opportunity to talk to these amazing people and understand more about them, expose them and their unique perspectives to the world. So I appreciate all of you for following in. And sir, I hope you have a great rest of your day.
Thank you.
Be well.
Bye.
This video was brought to you by our official sponsor, Telehelping. Need support for your business? Telehelping connects you with top-tier remote staff to help you streamline operations and fuel growth. Go to telehelping.com and get started today.